So, let's go on. So the next thing they want is they say, let's do the cash flow. We did the 3,000, which was in any case the one that I balanced on in the note that I did. Right. So now we want to have the repurchase shares. Now when we do the repurchase, it's extremely important that you remember you want the average and the above average. Ne? You want the price that you paid for it. Sharp. So you can take that 969 there, but then you need to remember to add the above also. Right? I see a frown. Remember, my selling price consists of two sections. When I buy back that share, it consists of the average price that I show in the note for capital, and it consists of the above average that I show in the retained income. Did I do the note for retained income? Did I do the note for retained income or only share capital? Only share capital. So if I did the note for retained income, it means I would take that 969 plus the one that says, I think we did it in the previous question, we did retained income. It would then be plus that one there. Ne? Okay, this is a different exercise. I'm just showing you if you did the retained income where you can find it. Okay? So what I wanted to say, yesterday I did explain this. That R1.80 you can go calculate. Ne? But it's easier just to say 100 over 85. Where did I get the 85? They told me that it was sold, ne? The average is 85% of the total. Meaning 15 is above average. Okay? So in other words, if I want to go calculate to see what did I buy it back for, I can find 12 rand. Right. That's how I get the 12. We did the loan repayment. I remember now. We did the cash. Let me just remind you again that their blocks is drawn different than I would have drawn it. If I would have drawn it, I would have given it to you in the format of the cash flow statement. Okay, so if I look at this, I can see that I would have drawn the line here, that this is the block. This is the block. You see? So in other words, this plus this gives me that. You guys just make sure of that, because they always do it like this, and then you guys have your reversal wrong. Okay. They also say, we did yesterday quickly while you were running out, how will they fund 1.5 million and without increasing the business risk, meaning don't take out a loan, because risk is loan. Okay? So what's your other options? It's by issuing shares and by using your retained income. That's basically all you have left. A lot of you said stuff like increase the sales. Now you have to remember something. If you increase your sales, it doesn't necessarily mean, or if you increase your net profit, it doesn't mean I increased my cash that came in. Ne? Because your cash is not equal to your profit. Because your sales could have been on credit. Meaning you're still waiting for the money to come in. Okay. I want to say, they will always ask you to calculate 3 or 4 ratios. And that 3 or 4 ratios, you must get full marks. Please. If I look at this, the first one, net profit after tax, most of you had that right. Net asset value, remember, she tells you too much. She overshares. Right? Now, please, don't write cents or rands. That will just, what's going to happen is when we mark and you say times 100, we assume your answer is in cents. If you were to say 12 rand 70, then you can't have 100 there. Then it must just only be this. Okay. So make sure about how you write this. Dividend payout. So the dividend payout, what they did here, this is the payout rate, which is the same as the payout policy, which is, and if you go look at the back of your paper, there is two different ratios for that. It's your dividends over earnings, there, ne? Or it can be that one that says net profit. What was that one? Yeah, this one. Dividends for the year over net income after tax. Okay. So, and in this case, you weren't able to use this one. You were supposed to use that one. Please make sure about that. Okay. So, they took the dividends, which was again a big calculation because nothing was just an easy thing in these papers. Everything had a calculation. So you had to get your final and your interim and put it over the net profit after tax. Can I just say to you, very important, if you swap the numerator and the other rater, then it's wrong. They don't even look at it, even if all your calculations were right. So, yes, my first thing is this thing, you don't use it. Unless you are not sure, then you just quickly go double check. Right, but this is not your first source of info. You're supposed to know this off by heart. Okay. So now let's quickly go. My thing is, I do not like it when you use figures. I like it when you go and you use your cents or your units. The smaller things works better. So,
sorry for interruption. Can we please have silence? There's quite a number of announcements again.
If I look at this one, they gave you the two alternatives. So remember this, because actually this one is easier. They took the final and the interim dividends, ne? Which you already calculated when you calculated how much was paid to the shareholders, ne? Remember that. So that 384, it consists of the 48 cents, so if I want my final and my interim, ne? What they did is they took the shares, ne? That 800,000 was the shares that each got 48 cents. Remember that 48 cents, remember yesterday, it's the final and the interim dividend. Alright? Or you can take the amounts. The 224, if you go look here, it's your shareholders for dividends final balance. So it's your final dividends. And the 160 is the one that we calculated as the interim in the previous question. Remember in the when we did this one. There, that 160. Okay? The 1633 is my net profit after tax, which is given to you here. Right. Now, the other method is the one that we usually do, the DPS on the EPS. Now, what did they go to? They took the DPS, your dividends per share. So if you said 48, it's still fine. Then you don't have to times with 100. Okay? Why did they say 0.48? Because it's 48 cents. So it's 0 rands, 48 cents. How did they get the 2 rand and 4 cents? They want the EPS. What is the ratio for EPS? It's net profit after tax over shares. So the net profit after tax, I've just shown you the 1633. How many shares were in issue? Now remember, we were working the dividends on the shares before the repurchase, right? And they said before the repurchase we had 800,000 shares. Remember why? It's because they said that the repurchase shares will still earn dividends, right? Even though they were repurchased. So if you say 1633 divided 800, you get the 2 rand and 4 cents. Okay. Also a lot of calculations for a very few amount of marks. When I go to question 3, I need you guys to go back to that lesson, and I did record it, where I said all the ratios are being put in sections, right? You've got your profitability, your liquidity, your solvency, your risk or gearing, your returns. Ne? And then we talked about when shares are issued, or the market price, or the NAV. You remember all those different blocks that I did with you. Now when you read your question, you go and you put stuff back in their blocks, okay? Because you guys are still using ratios that's not applicable to the specific question. Please learn to stay within your applicable ratios. Now, what do they say? You have to quote a financial figure with a trend. Okay? What is a trend? It went up, it went down. And give a reason. Okay, so profitability. My profitability ratios is my on. It's all the stuff from my income statement. Net profit on sales. Operating expenses on sales. That's the ones. So they say, quote 2 financial indicators with figures and trends that show an improvement in operating efficiency. So now I'm saying again to you, please, profitability and operating efficiency are synonyms. So they can literally say any one of those 2 words, and you need to be able to know you're going to quote your something on ratios. Okay, now they are talking about, they ask you which company are we busy with? Quote 2 finance with figures and trends of the company that shows an improvement. So you have to go look which company. And even if you don't get marks, you don't know how the memo is going to look like. So you're going to tell them which company shows the best. So if I look at Dodo, can you see Nasha increased the markup? Okay? But let's go look at the other ones. The operating expense of Nasha decreased, ne? And of Dodo increased. So immediately there you see Nasha is better. Ne? Net profit increase, decrease. So you're going to quote those 2. You're not going to quote the markup, because the markup does not tell you if the business was efficient. Let me explain to you. That's 65%. You're not going to say, oh, it increased. You want to see what was the go-to markup. In other words, if they say to you in the paper somewhere, they will say to you, the business uses a markup of 70%. They will say it somewhere if they want you to quote that. Okay? Now, if the markup is 70%, last year we only attained 60, this year we attained 65. Right? But can you see you need to compare it to the real market? Why is it lower than the real market? Because he gave discounts. And there were a lot of end of year or end of season sales. Okay, so if you can, the markup percentage you literally only use when they ask you to comment on the markup or the profit. Okay, so you're going to quote those two. And if you look at the answer, they say there, do not accept the markup. Not allowed. Sharp. So can you see Nasha didn't get a mark, but you're quoting only Nasha. So it implies that Nasha did better. But in some memos, this thing would literally also get a tick. You don't know how the memo looks like. Next question. Now they talk liquidity. How many ratios are in liquidity? 6. Now if I go look here, first thing you do, you are allowed to use highlighters on this thing. Where do I see liquidity? I see it, current, asset test, stock turnover. Nothing else there is liquidity. So there's 3 ratios. Now they ask you, question. The directors are concerned about the stock control. Quote one financial indicator and another relevant financial data to support this concern. Can you see that financial data is not a ratio? Okay, so now if I go look here, which is the most obvious stock one? And they ask you to quote 1. Remember, if you want to use the current and the asset test, the difference, you are quoting how many ratios? 2. How many ratios is this guy asking you? 1. So which one is the most obvious stock turnover? You see? Because this is how fast I'm selling. Okay? What is the other indicator that he wants? And if you look there, it's the only thing that feels, why did he give this? Can you see right at the bottom? Stock deficit. You see? Okay. Now, which one is he talking about? He's talking about Dodo. Now, if I go to Dodo, can you see your stock turnover is slower? Meaning, last time his stock turned, what does it mean? He sold out all his stock 8.9 times. Stock turnover means how many times do you need to replace your stock. Okay? So he replaced it 8.9 times. Now he only replaced it 8.2 times, which means his stock is selling slower. Right? And the stock deficit, look, it doubled. And what is stock deficit? It's stock we can't account for. It's just missing. In my books it says I must have this amount, but when I go count it, it's way less. And I don't know why. This is not stock that was stolen that I could claim back. If it was stolen, it was piece by piece stolen. Meaning you have a worker that today take one earring and tomorrow take a, it's not a big break-in stealing. So this is a under the radar thing that happened. And this is a big problem. Okay. Sharp. Can you see how you must think? The next one is the dividend payout policy, which is the dividend rate. Ne? So now we talk DPS over EPS. Now, listen to me. That percentage that I work out here tells me the percentage of the earnings that's going to be paid out as dividends, right? Now, if I take that earnings, I subtract the dividends, then I get the retained income. Okay, So whenever you comment on the dividend payout, you need to tell me two things. The percentage dividends, but then you also need to tell me the percentage retained. Okay? If I pay out more than retain, I want to keep shareholders happy. But if my retain is suddenly way more, it means I'm holding money back for a reason. And usually it's to expand or because of uncertainty. Like in COVID, they would rather retain than pay out dividends because they're not sure. Because remember in COVID, we never knew when it was going to stop. And a business still needs to pay his workers. Okay, so now let's see. Explain to Ben which company has accumulated sufficient money. So how do you accumulate money through a dividend payout policy? Would it be by paying out dividends or by keeping retained income? So can you see, they don't want you to comment on the dividends. They want you to comment on the retained income that increased. So which company is now suddenly retaining more funds? Right? Quote relevant figures, blah, blah, blah. Let's see. They give me the dividend payout rate. So now if I look at this, can you see Dodo is paying out 97% of his earnings. So he's only keeping 3%. Right? Nasha is 50-50. Which one is saving more? Nasha. So you going to say Nasha is saving up. Right? How do I know it? And now, you're not going to talk about the dividends that they pay out. You're going to talk about the retained income. So you're going to say, Dodo only retains 3%, whereas Nasha retains 50%. Look at the answer. Can you see here? Dodo retains so much, Nasha so much. So, Nasha is the one with them all. Okay, it's not about, and I wrote it there for you. I copied my memo for you because I make notes on the sides. And I wrote it there for you. This is not about how much they paid out. It's how much they retained, saved. Okay. Are you guys seeing how you can improve your marks in this question? Because this is the question where you must score. So now, share price and stock exchange. Now the moment they talk share price, you're going to think issue price or repurchase price, ne? Market price, and what's the third one? What's the third one that you always compare it with? NAV. Okay, you guys, I see you still got a lot of studying ahead. So, you want to compare those things. Because the market price is what people are willing to pay for it. The NAV is the value of the share in the company. Ne? They literally take their owner's equity and divide it by the shares. So this is how much the share is worth. This is what they are willing to pay for it, and this is what we ask for it. Okay, so now they say, comment on the change of share price in the JSE. So they're talking market price of each company at the end of the financial year. Quote figures and trends. Now they ask 4 marks. So most definitely, you're not going to get 4 marks by saying the market price of this one increased from this to this and that one increased. Definitely not 4 marks. They want you to compare it. So what are they giving me? So if I look here, what are they giving me? I see they are giving me the NAV. Can you see? And do I see the market price? And they don't give me the issue price. Okay, they give me those two. So now you're going to cover your base. You're going to say, Nasha, market price increased from this to this. And what do you do then? Then you go and you compare it with the net asset value. Can you see? people are willing to pay more for it than it's worth. So this is a good share. Now I do the same with Dodo. Dodo's market price decreased. Can you see? It's going down. Let's go look at its asset value. Can you see people are not willing to pay the price? Now I'm asking you, if you were investing and you invested in both these companies, of which company would you be suspicious of your investment? In Dodo. If I was this guy, I would take my money from Dodo and go put it into Nasha, because Nasha is growing. Okay, now look what they did. So let's see. The market price, né? Can you see if I said the market price decreased from this to this and is less than the NAV, I would get my full marks. Can you see? Can you see if you only showed the market price, there's only one mark. Okay, please go.